So I'm making a bet here, guys, that volatility is getting a little bit too low, and we could see a spike in volatility here in the very short term. We're going to break down what I just bought in the stock market right now. So if y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo, link down below. We'll talk more about that later, guys. It is free money. I appreciate you all for tuning in as always, and with that being said, cheers. Let's dive into it. So like I said, guys, volatility is getting a little bit too low, and honestly, it's too low right now for my liking. So for that reason, I'm taking a speculative bet right here that we will see some sort of spike in the VIX in the short term. I could be wrong, but this is what I believe. You guys can see the VIX is down from 29 points from back in the middle towards the end of March. Now it's at 17 points, guys, approaching the lows from back in February. If I pull this 4-hour chart up, you'll see back in February, we hit 1706, and literally, guys, on Friday, the VIX closed at 1707. And actually, you guys can't even see it. Hold on. Let me actually make my face a little bit smaller. There we go. You can see we hit 1706 back on the 2nd of February. And no joke, on Friday, yesterday, the day before I'm filming this video, we hit 1707, and the low of the day, oh yeah, it was at 1707 yesterday on the VIX. So this is just way too beaten down. And sure, it could go to 15, it could go to 16, but to be honest, I don't see it going much lower than that before we get some sort of spike. And I'm not saying we're going to go right back to 25 on the VIX, right back to 30. I'm speculating that we'll see maybe a couple points of a spike, right? Let's say we go to 15, 16, or maybe we chill here at 17. I don't think it's too unreasonable to say this could shoot back up to 20, maybe to 22, 21. In the short term, that'd be a spike of around, 20, 25%, a very big move, which we could make money on. And again, I just bought one of these ETFs that we'll talk about here in a second that will go up if we do see that scenario play out where the VIX goes up, let's say, from 15, 16, 17, wherever it gets down to, maybe to 20, 21, 22, there's going to be money to be made. And you guys can see, if I zoom in on the VIX here, last time we hit 17, which again was early February, we were very oversold, and mind you, now this go around, we're even more oversold than we were back then. But when we hit 17 back in February, the VIX saw a massive run to about 22. That was a move of 30%. Then it actually went up even more to about 24 after that, which we're not going to get too deep into that. But overall, what I'm thinking is, again, a relief rally in the VIX. We're going to get it, whether it's on Monday, whether it's, Wednesday, next week, the week after. I have no idea. All I know is I'm confident that we will get that spike. So for that reason, guys, I picked up a starter position in UVXY. Let me pull this up and we'll talk a little bit more about this particular ETF. So I bought some at $4, I believe $4.15. So full disclosure, I am underwater on this right now. It's at $3.98. So I am down about 15, 17 cents on the position. Nothing crazy, but I'm going to hold this for a couple of days. I think we are going to get that spike again in the VIX, which then would yield a nice return on good old UVXY, which, mind you guys, this is at a low on the 4-hour chart. It's at a low. We just hit 395. And, last time we saw the uptick in volatility back during the March banking crisis, which could continue here maybe at some point in April and May. Who knows? That's what Warren Buffett thinks, at least, right? You guys can see last time we had that spike in volatility, UVXY went from 445 to about 730. This thing went up a whopping 70%, which was a very big move for this particular ETF. So I'm in this with a speculative position. I might add more to it moving forward here, maybe on Monday, Tuesday, and I'm going to hold it for a couple of days, maybe a week, maybe 10 days. And mind you guys, this is not meant to be held long term, and by long term I mean 3 months, 6 months, 9 months, a year. It's not meant for that. It's meant for very short term trading. So let me actually show you guys what this ETF is all about. Let's dive into it very quickly. But before we do that, take a look here at the Fear and Greed Index, guys. This is going to show you something that is quite interesting. We're more on the greed side now than extreme fear, and we're clearly past neutral at this point in time. And if you guys come down here a little bit more and take a look, I mean, look, we're clearly now above the 125-day moving average on the S&P 500. You guys see that right here. And we all know the S&P 500 has been doing very well. And of course, the more the markets go up, the VIX comes down, the more we creep towards the greed and the extreme greed sign of this fear and greed index, right? And if we come down a little bit more here, you guys can see put and call options, the ratio there, the 5-day average put call ratio. We have the VIX and its 50-day moving average, which it's down a ton. You guys see that? That's that's not a surprise. We just talked about that. We have junk bond demand, safe haven demand, which we're not going to get too deep into in this video. But all you got to look at is, look, we're now close to, extreme greed. We're more in the greed side of the fear and greed index. We're at 67 to be exact. And look, a month ago, we were in extreme fear during the whole banking crisis. You guys see that right here. We were in extreme fear. We were at 23. And about a year ago, we were in fear. We were at 39 on the fear and greed index. Now, again, we're at 67. So I think at one point, guys, at some point, we're going to get a spike in that VIX, and we're going to start going more neutral, and we're going to start going back to the fear side of things. Maybe extreme fear. I don't know if we will get to extreme fear, but I think we'll start creeping back towards fear, towards neutral at some point. And I could be wrong. I mean, we have earnings coming up. That's a big, factor here. We have big tech reporting. So if they blow earnings out of the water, they do very well. This whole theory that the VIX is going to spike and, we might get to fear, that might go out the window. But if they bomb earnings, guys, if big tech doesn't do that well, or maybe their guidance is bleak, right? There's going to be a spike in the fear and greed index. VIX is going to go up. We're going to make money on UVXY, which let's talk a little bit more about UVXY because you guys might not know much about it. So let's talk about it right now. So UVXY, you guys see right here, is the Ultra VIX short-term futures ETF. And the investment objective, let me zoom in on this so you guys can see it nice and clear. You can see ProShares Ultra VIX short-term futures ETF, which is UVXY, seeks daily investment results before fees and expenses that correspond to 1.5 times, 1.5x, the daily performance of the S&P 500 VIX short-term futures index. So in other words, it's a bit of a leverage ETF here, 1.5 times of the daily performance of the S&P 500 VIX short-term futures index. And look at this, guys. These are some of the important considerations, which honestly you probably should go look at for yourselves to really deeply understand this ETF, because at the end of the day, guys, it is not for long-term investing. This is not for long-term investing. This is for short-term trades, right? So the funds are benchmarked to an index of VIX futures contracts. The funds are not benchmarked to the widely referenced CBO volatility index, commonly known as the VIX. They're again benchmarked to an index of VIX futures contract. I mean, look at this, guys. This fund is not an investment company regulated under the Investment Company Act of 1940 and is not afforded its protections. Please read the prospectus carefully before investing, and I'll use that investing word loosely there. I think it should be saying trading, but either way, guys, again, this leveraged ProShares ETF seeks a return that is 1.5x the return of its underlying benchmark target for a single day. Keep that in mind, for a single day, as measured from one NAV calculation to the next. And due to the compounding of daily returns, holding periods of greater than 1 day can result in returns that are significantly different than the target return, and ProShares returns over periods other than 1 day will likely differ in amount and possibly direction from the target return for the same period. So honestly, anything over a day of holding is risky, although you could get away with, like I said, a couple of days, maybe a week, 10 days, which is what I plan to hold it for, probably in that 5 to 7 trading day, ballpark. And if I'm wrong, I'm not scared to cut my losses, guys. That's the whole thing with trading. You have to be, very in tune with where the charts are headed, and you have to be willing to cut losses. So you guys can see, if I come down a little bit more here, which will show you why you can't hold this long term, the 1 month return is -7%. You guys see that right here, right? The 3 month return is -32%, which is not good, and it gets even worse, right? 6 months, it's down 64%. You guys see that right there. 3 years, it's down 80%. You guys see that. 10 10 years, it's down 76%. So you got to be careful. This is not meant for long-term investing. And that's why I cringe every time I see a YouTuber or somebody out there that says, oh, you got to hold leverage ETFs for the long term. I was buying this and I've been holding it for this long. I was buying this and I'm holding it for that long. I just cringe when I see that, because deep down, I know, and I don't know if they know, but, deep down, I know this is only for short-term trading. If you're doing this stuff for the long term, you're holding long term, you're going to be in a bad situation. Let's put it that way. So that's a quick rundown on what I'm doing right now, guys. Again, I'm buying a little bit of UVXY. I did already at an average cost of $4.15, as I do expect volatility to start creeping up here at some point in the very near-term future. So what do you guys think? Let me know your thoughts down below in the comments. Hit that like button. Feel free to subscribe as well. And don't forget to get up to 15 stocks for Moomoo. If you haven't done that already, use that link down below. Open up an account. You get 1 free share of stock. Once you deposit at least $100, you get 4 more stocks, totaling 5 free shares of stock. And if you deposit at least $1,000 onto the platform, guys, you get another 10 stocks, totaling 15 free stocks. So yeah, if you want some free money, you want to help out the channel, use that Moomoo link down below. You might as well check out the Patreon as well and get 12 stocks from Webull on top of the Moomoo stocks, also linked down below. And with that being said, cheers, guys. I'll catch you later.